Wouldn't it be great if you had a higher probability of winning this game of crypto tennis where you can buy low and sell high? Well, today we're going to part three of our 9-part series on how to identify high probability setups where we look at momentum, pattern, and price. My name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008. Now, what we're going to focus on is a third degree of wave count using something called Elliott waves, which is one of the best ways of measuring human behavior and psychology, which is reflected in the price of most cryptocurrencies. So let's dive straight in. So we are focused on Solana, and in part one, we focused on momentum, weekly and daily momentum pointing up. And then in part two, we covered a wave one and a wave ABC. So we covered 2 degrees of wave count. So just as kind of recap, this is a wave 2 on the way down and what looks like an ABC. But in today's part 3, we are going to focus on this part of the wave C. Does this pattern unfold in a certain way that gives us a massive clue that this is looking like the end of a trend on the way down before we see a potential reversal to go to the upside? Now, we've taken the data back to July of last year, where we identified Solana in advance before it went from $25 to over $250. And I'm showing you how we did it, the method behind the madness, because any advanced science is indistinguishable from magic. And we are measuring the science of psychology, sociology, and psychology over here. So what we're going to develop over here today is we got the momentum pointing up. So we've done that already. We've got 2 degrees of wave counts. But what we're going to focus on now is a third degree. You only really need 2, but when the third degree is available, we will use that information all day long. Now, first of all, the price going below this point gives us a clue. And also, the price just tagging below this point gives us another clue that this is looking good to be a wave C of a wave 2. And we've got a question mark there. The reason why we have a question mark is we are only ever doing probabilities and never certainties. So we always want to have that factored in when you're buying your positions because you want to have proper risk management. But the thing I wanted to focus on, what I was using with Solana when I was looking at this in July of 2021, was that this looked like a wave 1, even a wave 1, a wave 2, some type of wave 3, a wave 4, and then a wave 5. And most wave Cs break down into a 5-wave sequence. So what this gives us is 3 degrees of counts that abide by Elliott wave rules. One of the rules of Elliott waves is wave 4, which is this wave, cannot trade into the range of wave 1. So I go, that is valid. And there's a few other bits and pieces. But now what we have is something very powerful. We got 2 degrees of momentum. A weekly momentum pointing up, or at least oversold, daily momentum pointing up. So that's our first big clue, that the trend reversal is looking like it's in place, but by itself is not enough. Then now we have 3 degrees of Elliott wave counts. And we want to summarize this because this is so powerful, and we want to use all of the information all of the time. So over here, I'm just going to make sure we're really clear on what we're seeing over here. And this is what I saw in advance last year and how we identified Solana. First degree of count, we got a wave 1 and a wave 2. That's 1 degree. Second degree is 1, 2, 3, 4, 5 over 1, and ABC over 2. That is 2 degrees of wave counts. And then the third degree is really focused on this wave C over here, where we're looking at a wave 1, 2, 3, 4, 5. Most wave Cs, or wave Cs always, finish in a 5-wave sequence. And sometimes it's clearer to see than other times. And here it's pretty obvious. Up here it weren't obvious, but when this low got exceeded, then it's very clear to see is a 1, 2, 3, what looks like a deep 4, and then a wave 5. So now we have momentum in our favor, and we have a wave 5 of a wave C of a wave 2 that is telling us in advance we have a very high probability that we are going to see all-time new highs being made because the next wave typically is a wave 3. And in a future lesson, I'm going to show you how you can project in advance, how we projected in advance, what is likely to happen with a wave 3, because a wave 3 is often the most impulsive wave of a sequence. By the way, if you want to learn how to do Elliott wave and Fibonacci, seeing the price movement in advance, take my free Elliott wave and Fibonacci masterclass, where we break it down for you, the key 3 Elliott wave rules that you need to know and how to combine it with some of the other key factors, because what we're looking for is a confluence of events. We have more than one thing telling us the same thing is likely to occur. So then you become the casino where the edge is in your favor, because it's probabilities and never certainties, but we can stack the probability in our favor. So now we've done part 3, momentum, 2 time frames. Elliott wave counts on initially 2 time frames, but now in part 3 we added a third. In the next part, we are going to cover Fibonacci price. The basic Fibonacci is retracements, and we are going to see how we can add Fibonacci psychology, which is the psychology that we're measuring, while the typical wave 2 retracements that we can use to our advantage, and we can use it in advance. That gives us a higher confidence level that we can anticipate what's likely to occur next. So if you like today's content, like, subscribe, hit the bell notification. I'm going to read a quote from my book. We are going for what chapter we're going to go for today? We're going to go for chapter 4. All right, I'm going to bring a bit of, no, sorry, it's chapter 3. Chapter 3, it's Confucius. It does not matter how slowly you go, as long as you do not stop. Rome wasn't built in a day. You did not learn how to drive a car, well, not well anyway, in a day. It took time, it took practice. Elliott wave, Fibonacci, momentum, it's the same thing also. It's to get used to reading the momentum, used to seeing the pattern and pattern recognition on more than one count, ideally 2 or 3 degrees of counts. And then we are in the future going to go into Fibonacci price, and in the next part, in part 4 of this 9-part series, we're going to focus on retracements, especially wave 2 retracements. So take my Fibonacci, Elliott wave Fibonacci masterclass, is in the link below, it's absolutely free, and it will cover the high-level thinking on how you can anticipate the price movement before it actually occurs. All right, I'll see you in part 4 in the next video. See you soon.